and Stephanie. Thank you for joining us back on stage. We want to re-examine a couple of the questions that just came up in the first panel on specifically on NGEU. So again, congratulations, I think there's still in order to the European Commission for setting it up, which is a complicated issuance program set up in record time and now doing, I think, a terrific job. So congratulations on that. To revisit some of the two of the questions that we heard earlier already on the ability of the NGEU to pay, which we touched on. Why don't we start with that? I think you're in a position to talk about that in more detail, and then we'll look at the frequently heard question about the life of NGEU after 2026. So, but first on the own resources and recourse to money to repay. Tell us a little bit more about that, please, Stephanie. Thank you.
Thank you, John. I think it is indeed a very important question, given the shift is a very small word compared to the actual shift in the volume of issuance that the European Union has been doing. The Commissioner mentioned it in its introduction. We went from 50 billion outstanding debt in 2019, and this year we will, towards the end of the year, reach about 500 billion of outstanding debt, and we will continue until 2026 to issue with the prospect of about 750 billion. So the question is absolutely legitimate. How is this debt going to be paid back with? And this is legitimate because we are a different construction. We are not a state with a direct right to tax, but we are not a supranational working with capital. We are basically in between. But we are much closer to a sovereign than we are to a supranational. And this is through a lot of different characteristics. We work much more with a budget line than with the capital I just mentioned. We don't do projects. We basically do projects, but what we do fundamentally is to support financially our member states in delivering in our European priorities. A lot of them have been mentioned: climate, digital, productivity, competitiveness, defense. We're going to talk about this. So this is fundamentally an EU budget here to support financially the development of the member states for the future. And that's why I think it is actually such an important tool. This morning the panel was extremely interesting, showing that basically this tool has changed fundamentally the way the European Union functions.
Right.
They've decided together to actually pre-finance their future with the next generation EU. Now, how do we pay this debt? So the EU budget is the one that is backing the issuance program. The EU budget is absolutely not new. It's been there forever, and this is a legal construction in which the member states, the countries that participate in the European Union, agree on a 7-year program to actually put together a certain amount of money. And this is how this debt is going to be repaid, through the annual budget. The legal and financial commitment of the member states to the EU budget cannot be stronger. It's like constitutional level. Right now, it's been agreed not only by the government, but also by the Parliament, the European Parliament, and the national parliament. So this is the strongest. And I think it was rightly mentioned by Elliot earlier this morning, that basically the legal duty to pay back the EU budget is at the same level of any other national commitment. And one thing which I want to say, which I think is extremely telling, is that throughout the worst crisis the European Union has been through in the past decades, there has never ever been a failed payment. Never. Greece, really in financial difficulty at some point, has always honored its financial commitment to the European Union. And this has always been the case, even when we disagree on on fundamental issues, legal issues, for example, we have disputes with some of our member states. We will freeze the fund. They will continue to pay their contribution to the EU budget. So this is really telling, because this is a fundamental legal and financial commitment towards the European Union. So the analysis, and you mentioned it, most of the rating agencies, all of them but one actually, are rating the EU as AAA, and the lower rate we get is AA+, because they do a different calculation based on the actual AAA countries backing up the union budget. But there is one element also, and then I finish with that, which is showing the strength of the commitment and the solidarity between the member states to what we pay in this debt and to what we pay in the budget, is the fact that if one thing would be short of liquidity, for example, we can go to one member state. We don't have to go to the 27 and ask for that. We go to one, and this one we'll have to pay for all. Then we will settle it when we have time. But the commitment of the member states funding the EU budget is massive now. What is important is that at the end of the day, the own resources discussion, whether we have the right to tax, whether we can do both the member states, is more for technical at the end than financial one. Because today, this is through a certain technique, we can change the technique, and at the end of the day, the own resources is a technical discussion. But the legal commitment is there and is beyond that.
Right, so in short, that in future you may of course have own resources, that's an early discussion, but in the meanwhile you've got to be incredibly robust recourse to national treasuries in the way that you set out. Thank you, Stephanie. On the deadline by which 2026, after which NGU stops in theory raising new debt, tell us a little bit about that. We touched on that this morning. Of course, there are political considerations as well, but nevertheless, NGU will remain a very big issue, come what may, for the foreseeable future.
Absolutely, and this is very important that we explain this very clearly. I mean, we have this objective today. Yesterday, this objective was already increased in terms of issuance through our commitment to provide long-lasting financial support to Ukraine, for example. So we have read in February earlier this year that we would provide Ukraine with a 33 billion loan, and this is new. So the financial commitments, the volume of issuance is not fixed in stone forever. What is fixed, I think you correctly said, is the fact that NextGenEU, so this particular program, indeed require that we will stop the net issuance in 2026. But obviously, we have up until 2058 to repay that debt at this current extent, so it means that the refinancing of this debt is there for a very long period, and that means that basically, even if we were not using this borrowing for anything else, which I personally don't think is going to be, we would still be very present on the market, and we will have an issuance of about 50 billion a year between now and the end of the last decade. So the next decade, sorry. So we would be moving for very high volume today, about 150 billion a year we have, to less, obviously, 50 billion, but this will take time. Now, the question is, will the member states, will the European countries deprive themselves from this incredible tool that we have?
Yes.
And this is really the question. And the question is not so much about will we have another crisis response as we had for COVID through NextGenEU, which basically agreed to give a lot of financial support to the most exposed member states. And in the conversation this morning, interestingly, someone said Spain is the one who brings growth today to the European Union. Well, Spain is one of the most of the largest beneficiaries from this financial support, just after Italy, for example. So it's no wonder, actually.
Yes.
But the question is, will we reproduce such type of financial support directly to member states? Maybe not, maybe not. But what is pretty clear is that, and I think this has been demonstrated through the support to Ukraine, is that when there is a need on which the Union agrees that we have to finance it, it will be very hard to say no to continuing borrowing. And I think the Ukraine facility has proved the case that when there is another emergency, there is obviously the temptation to use this very powerful tool. And in defense, for example, in defense spending today, there is some conversation going on whether or not the EU budget should or should not finance such expenditure, and would we have to recourse to borrowing. The jury is still out, and this is something that is discussed. The European Commission will report in June to the leaders of the Union on the possible financing tools to fund military expenditure. Clearly, one way or another, the borrowing, the Commission, someone else will probably be discussed as well.
Right, but it's, certainly NGEU looks like an incredibly useful tool in the toolkit, and maybe it will find other uses later on, and even if it doesn't, it's going to remain a big issue, simply others will explain in a moment. I want to spend a bit of time on the asset side and the disbursements of the funds. Tell us a little bit, Stephanie, where these grants and loans have gone and what effect they're having, and to what extent they represent European policy.
Mm-hmm. Absolutely. So we're about a third of the disbursement program. Some say, and this morning also it was mentioned, that there is a bit of delay in the payment to the member states in the disbursement of those funds. I think, in fact, it is correct to say that we are a bit late compared to the original program. The original program, you will remember with me, was designed in 2020, 2 years before the war in Ukraine, and clearly the energy crisis that we felt, the rocketing energy prices, rocketing interest rates, as was mentioned this morning, did completely change the macroeconomic environment of the European Union and of the member states. And we, Reinhard explained earlier this morning, we paused and reassessed whether the program we had decided together was still appropriate given the changing circumstances. And we did decide to redirect part of the funding towards focusing even more on the energy independence of the Union, of the European Union. And so we did take a bit of time to reprogram those funds, to reassess whether the projects we had in mind were still the right ones. And therefore, naturally, and I would say logically, it did delay a bit the implementation of the program, but we're back on track.
Right.
And I would argue fundamentally that we are seeing this program already anywhere. We are seeing reforms in the Union that we have been asking for the last 10 years with not much success, now being implemented. In Italy, the justice system, in Spain, the labor market, in other countries, focusing much more on green investment, for example. So we do see the actual projects being delivered on the ground. Of course, these are very long-term projects. You don't do the green transition in 2 years, so it does take time. This is normal, and we will see more and more of this coming through. We have been doing a midterm evaluation of this program, and we do see results already. And I personally believe that these programs will actually fundamentally change the countries. And I think in 2-3 years' time, when we look back at the situation of those countries pre-2020, we will see much improved situation in terms of resilience, in terms of green, in terms of digital, in terms of social, that was unforeseeable before those programs.
Yeah, well, perhaps we can explore that a little bit. Reinhard mentioned that we may get more than 1% GDP impact in some places. We're already seeing perhaps the economic benefits of the NGEU disbursements at a time when we heard this morning that productivity growth are maybe more important than the fiscal status. Tell us a little bit how you expect the economic performance of Europe to be impacted by this program in specific instances.
Yeah. I actually think, one of the graphs that Reinhard was showing is for me one of the most telling when you look at the labor market performance.
Right.
COVID came, the entire economies were locked down. Then you see a free fall in employment.
Right.
We came with the first crisis answer in the European Union with a program called SURE that was basically public financing supporting short-term employment, so to keep people in employment, to subsidizing basically the firm to keep the people. And this you see in the incredible rebound of the labor market.
Yes.
And this was, and I think was mentioned already this morning also, that the hysteresis impact that we had seen from the previous crisis, the financial crisis, on the labor market in Europe has not been felt a second in Europe. And I think this is one of the big successes of the crisis response. What we see also is the recovery in terms of GDP. But what is even more important, and Reinhard mentioned it, is the build back better idea. And this is, I think, what will make the growth of tomorrow. We've been investing close to 800 billion in our economies, and we've been investing this 800 billion to change these economies, to make them more resilient, socially, economically, to make them more ahead of the curve in terms of the green transition. Europe is energy dependent. The green transition is eating us more than any of the other continents. We are aware of that. And that's probably why we are leading here also in the transition. And so for Europe to become less dependent, meaning more resilient and more future-oriented, we have to be a leader here. And Next Generation EU program is helping us also on the digital side. This will help us develop or build our future productivity. It is clear that Europe has a challenge in terms of productivity growth and growth prospects, not new.
Yes.
But what is new, I believe, is the awareness that we have in Europe about that. And when we are today discussing about future policy in Europe, the only name that you hear continuously is competitiveness and productivity. We were together with the commissioner on Monday, opening a conference on the future budget of the Union. Of the European Union, and competitiveness was the buzzword. Every other word was about competitiveness. The next EU budget will focus on competitiveness and will support the competitiveness of the European Union one way or another.
Okay, and we'll explore that with Commissioner Hahn in a couple of sessions' time. You mentioned the carbon transition. In one leap, the European Union became a global benchmark this year in the green bond market, and certainly I witnessed many circular discussions about that market, waiting for a pivot point on liquidity.
Mm-hmm.
How important is the green bond component of NGEU, both in terms of the issuance and asset side?
Yeah. So I think this is really a testimony also of the political will of Europe to be leading in sustainable finance and in the green transition. So today we have about 56 billion of debt in green bonds, and basically we think we will be able to issue about 250 billion overall throughout the deployment of the program. I think what makes us extremely credible in our green bond strategy is the seriousness with which we check and report on the green expenditure. Green bonds is a difficult thing.
Yeah.
There is a lot of demand for green bonds, and we're very happy to see that, but it's a different segment. It's a difficult segment because you have to make sure that you can demonstrate that every single euro you're issuing is actually financing green expenditure. And here, because we have this supranational, we call it as wish, our construction in the European Union, we are even further away from the actual green expenditure. So we have to ask our member states to whom we give the money and to report on us on the green expenditure, and they have to track down the green expenditure. So it takes time.
Yes.
And this is the message basically that I want to pass here. It will take time for us to build the pool of green expenditure against which we will be able to issue.
Yeah.
But we are very confident that we will be able to reach our target, which is 30% of overall Next Generation EU issuance that we will be able to issue green. This might extend beyond 2026 because we want to make sure that we have the green expenditure before we can actually issue.
So it's a pretty strong commitment over time. You're saying, I think, that the mechanisms to check on use of proceeds perhaps slow things down a bit, but you intend to meet the overall targeted disbursements and issuance in that field.
Absolutely, and we have been issuing, the Commissioner was presented his first report on green reporting to the COP28, and we see already the results of that. We have reduced greenhouse gas emission by 1% already, but this, of course, is still very small compared to what we expect because we are at the very beginning of those green expenditure being realized on the ground. So it will take time, but the commitment to 30% will be.
Interesting. Do any of you have a question for Stephanie? You'd be very welcome to put one. I've certainly got a couple of more, but raise your hand if you'd like to ask Stephanie a question. We'll have a chance again in a minute. Meanwhile, Stephanie, in terms of the future evolution of EU bonds, EU issuance, we talk about EU bonds more than NGEU. There are a number of different programs. You've already mentioned that the program was repurposed to do with the energy crisis and so on. What do you see as the medium-term future for these programs and the EU as an issuer?
Yeah, so I think, as you mentioned, we used to talk about next-gen EU bonds and then SURE bonds and the different label bonds, and we moved away from that to a unified funding strategy, which basically helped us to be more readable in the market with one bond. These are the EU bonds, and then we finance the different programs, and I think this is very important, mainly for liquidity, and this has already helped us in increasing the liquidity of our bonds, and I think this is also testimony to the demand that exists here for our bonds, so this is very important. I think we have been increasing our liquidity massively, thanks to the funding strategy. This year, in January, we had a record 180 billion of liquidity on our bonds, so it's really impressive for a bond which is pretty new. It's 3 years old basically on that size. Now we have been doing taking a number of steps, and Siegfried will go certainly into the details of that, to make sure that the ecosystem we have and we use is in sync with the volume of our issuance. Also because we are still not quoted as a sovereign, we are quoted as an SSA, and this is raising sometimes some difficulty in terms of the pricing of our bonds, and we do believe that we can do better. So we've been investing quite some efforts on that.
Yes.
We've been investing some efforts in terms of price discovery, making sure that we are quoting on the relevant electronic platform to ease the transparency and the price discovery. We've been taking a number of other steps. We will, by the end of this year, put in place a repo facility to support also the liquidity, to support our primary dealer network, 37 banks, so that's very important in terms of development. But the next step really, the one which we believe, and actually our investors believe, they mentioned that in the first inaugural survey we had from our investors, is the fact that we are not yet into indices.
Right.
That are putting the sovereign on. And here, we are in discussion, of course. We have been approaching the index provider to explain our case, to explain that it's a bit, of course, this is their choice. They say they will do what they want. But if you're not including in your index the 5th largest euro issuer, you don't really sell the market. So you're actually, the ones who are actually buying those index are missing out on our own goals. And we do believe that there is an adjustment to be made here. We have been having good conversation with ICE in terms of progress. They have been launching a consultation on their own process to see whether they would include us or not. The answer will come in August. Obviously, if we were able to take that step, that would bring us really closer to our objective.
And certainly, to me, having spent a long time in capital markets, Siegfried and team built something that looks like a comprehensive sovereign debt management office with all the tools, including money markets, and a comprehensive yield curve in double period of time. So I hope it gets to remain useful for you. Anyone got a quick question for Stephanie before we move into panel discussion to explore the technicalities in more detail? Last question from me, Stephanie. NG was passed quickly, set up quickly in crisis. There is a cliche that Europe is built in crises. what will be your personal hopes for this vehicle in the medium term? I realise there are political challenges for it to be a permanent facility, so I've touched on that already, but what will be your personal hope?
I actually believe that it is very true that the EU is facing crisis, but not always at the first time. Because during the financial crisis, we didn't build much. I mean, we did a lot in terms of infrastructure, banking union. We made some progress, but we're still very far away from the capital market union. So we did improve in crisis instruments. What I think is the revolution linked to the next EU is that it is a crisis instrument. But it's not only looking backwards, it's very much looking forward.
Right.
And it's actually bringing to the table a mechanism in which the EU affirmed its will to actually be together and construct a future together. My personal hope would be that whatever the funding of the EU budget should continue, one way or another, to fund this type of instruments in which we basically make sure that our member states are equipped with the financial tools to actually face the new challenges. We know that we will have huge investments in front of us in terms of the green transition, digital competitiveness. We have been having a lot of conversation about whether the EU is too exposed to its dependencies, be it in raw material, in technologies, in skills. I mean, that would be probably the best way to go. Absolutely. So this reflection on where the EU has to go and how we actually support our member states will remain, and actually believe that financial instruments of this type will have to remain, otherwise we won't be able to finance the investments that we need.
Thank you very much, and certainly Reinhardt's charts earlier, there's an interesting exhibition of what can be done with fiscal stimulus. Perhaps there's a complicated mix of private and public inputs into the economy, but perhaps, as you said, those charts are very finance ministry in Europe, the NGEU will have a long and bright future, I think. So thank you very much, Stephanie. That's a wonderful talk, an impressive project. I'm going to talk to you more later. Thank you very much. A round of applause for Stephanie.